Carsten, thank you very much for your time. Thank you for your patience. How does this imminent trade war that we seem to be on the brink of impact your business? How concerned are you?
So if you look at Byton, you will find Byton is a global company, the global product, a global team using global technology. But Byton is rooted in China. Supply chain is to more than 99% in China, and we're producing in China. So we believe in globalization. We believe in global business. Over time, you might see frictions in trade relationships between countries. This is unavoidable. But on the bigger picture, from our understanding, this will not be an issue for us.
So the fact that so much of the business and so much of the supply chain, as you say, more than 99% is based here in China, that isolates you to some degree?
No, I wouldn't say it isolates us. I just said we are a global product, a global brand, and a global team. So we understand the markets worldwide. We have access to technologies we need worldwide, and we are able to supply our product out of China, out of Nanjing to the world.
And you were considering opening a factory in the US. That was part of the discussion, I know. Is that now off the table as a result of what's going on between Beijing and Washington?
Our plan for now is to complete our plant in Nanjing, to bring the product to production. We will start in the Chinese market by end of next year, which, by the way, is not only the most important, but the biggest market for us. And then we are going to the US in 2020 and in Europe the second half of 2020. Whatever future implications are, we will take into considerations, and whenever we would have to react on it, even from a production side, we are prepared to do so.
Do you get any sense that your investments in the R&D center, for example, in the US, that they could be prohibited as a result of these moves in Washington to curtail Chinese investment in the US?
I didn't get any indication in this area, and I'm not so much afraid of it because, as I said, I believe in global economy, I believe in global teams and in global products. And this is true, by the way, for every company worldwide, not only for the Chinese ones. So we will have to find a solution, and the nations will have to find a solution to keep that going.
So it sounds like, to be clear, you haven't changed your plan, no significant changes to your strategy as a result of these trade tensions?
Our strategy is still exactly the same.
Do you get any sense that the reform moves that we've seen here in China around the auto sector may be changed, adapted or delayed as a result of these trade tensions?
I don't see this for now. I think there are no indications or evidence towards this direction. And again, I'm not, from a Byton perspective, I'm not worrying too much about it. We are here. This is our market. We are producing here. And by the way, we have a lot of R&D, local R&D here as well. So for us, we are looking very confident to our future.
Very recent news that China is going to be cutting electric vehicle subsidies again or further. How does that change the competitive landscape?
This is interesting because I all the time I never have been a fan of subsidies, to be honest, because subsidies they can initiate new technologies, they can open up market segments, but at the end of the day, the product and the business model has to convince the people by itself. So Byton's business model doesn't rely on subsidies. It has to be stable by itself. And you will only be successful in this market if you have the right products which can compete in the market with other products. And this is what Byton is heading for. You recently partnered with the state-run company FAW. How is that partnership working out for you? So we are very happy that FAW eventually decided to invest in Byton as a strategic investor in our B round. They are the biggest investor in our B round. To having them as a partner obviously is something very, very important for us and very, very beneficial. We think that the both parties have strengths. We can very much benefit from a supply chain potential, from production background and experience. FAW might be able to benefit from some of the new technologies we developed. So we see a very, very strong cooperation with a lot of potential going forwards to the future. Are you looking for additional partnerships at this stage? In our B round, another a very important technology company decided to invest in us, which made us very happy as well. This is Contemporary Amperex Technologies, the ATL. And they are our supplier on the battery side. We identified some potential maybe to drive technology further towards the future. And this is the way we are going right now, and let's see what the future brings. But potentially you're in conversations with other potential partners? Yes, we do, because if you want to create a complete new ecosystem, a product, an ecosystem, and new business models going to digital, to big data, and to shared mobility, you never will be able to do this by your own. Or the biggest mistake you can do, and this is to some degree, from my understanding, a weakness of traditional car industry, if you try to do everything by yourself, you will fail. So you have to become eventually more as an integrator of different parties, different partners, to create and manage this whole system. And this is our approach. And naturally, we are searching for new and other partners.
What other pieces are you looking to fit into that puzzle then? You've got the OEM, you've got the battery maker. What other fits are you looking for?
To bring our smart device on wheels to life, our Byton Live Cloud. Now it's all about content in our digital ecosystem and cloud, and we are talking to a lot of different parties being able and being interested to provide content to our ecosystem.
Potentially a Tencent, an Alibaba, or a Baidu?
There are a lot of great names out there which you could think about.
Okay. In terms of funding, you successfully, as you said, raised about $500 million in June, B series. Are you fully funded for 2018?
Yes, we feel quite comfortable now for 2018. We are planning for a next round of funding, our C round, maybe beginning of next year, based then on our next achievement that the car will arrive to the plant and that we will see out the first production tryout vehicles in our plant in Beijing.
And in the C round, you're looking to raise how much potentially?
This will be a significant amount of money again. As you know, what we are doing here is capital intensive. It's too early to talk about exact figures.
And the logical step by 2020 would be to look at an IPO, or is it still too early?
We, in certain point in the future, we are going to look to an IPO, without any doubt. My approach here is very clear. I want to build a sustainable company first. So the company has to be sustainable, the product has to be successful in the market, and then whenever the right point of time would arrive, we will go public.
And the last time I spoke to you, you talked about a timeline that would see you having direct deliveries of your SUVs in the China market by the end of 2019, the US market by the middle of 2020. To be clear, the trade tensions don't change that time frame at all?
For now, we stay exactly with the plan we had in communicating. There's no change.
We had an interesting conversation with the chairman of Beijing Auto, BAYAC, and he predicted that in the next few years you're going to see consolidation in the auto market here, potentially up to a third of the startups pushed out of the mix, and saying that if you're a startup in this space, you need to team up with an SOE. Do you buy into that analysis?
In principle, I would buy in. I would be even more aggressive in the percentage of the company which will survive at the end of the day. Because if you look to the success factors, what do you need to be successful as a new player in this market? First of all, you need a product, a really attractive, innovative product, a connected car. Some of the players might have this. The second is much more difficult to achieve. You need the ability to produce, industrialize those cars in high volume, high quality at a target price. This is one of the most complex things you can do in industry, if not the most difficult one. And my prediction is we will see many of those parties fail in those areas, in this area. Third one is if you want people to buy your product, you have to create a brand. You have to create a brand and you have to let people know why they should buy your car. And I don't see too much brands really being shaped and developing. And the fourth part, and this might be even the most important one, if you look to traditional business model of car makers, then they sell cars. The best companies in today's area, in today's industry, do an EBIT of 10% This will be less in the future because the technology will be more expensive to satisfy all the regulations. So do you think you can build a sustainable business model on an EBIT of 10% or lower? Probably not. So to be successful as a new player in this market or as a future player in mobility market, you have to change your business model. You have to use your car as a digital platform. You have to make use of data and digital services as business content. And eventually, you have to become a mobility provider based on your products. This is the way forward to be successful. This is Byton's way. And now you can make up your mind by your own how many of those new startup companies will meet all those four factors.
You expect to see significant consolidation in the auto sector.
This one
when does that shakeout start to happen, do you think?
What we see right now is that those new products will go to the market all around 2019, 2020. So the development will start. It's a bit difficult to predict how fast this will go, but in the next 7 to 10 years we will see those dramatic changes.
On the Made in China 2025 plan that is really in focus now in Washington, are policymakers, whether it's in the US or Europe, misreading the Made in China plan? Is it the threat that they deem it to be?
I don't think in dimensions of threat because, as I said before, I believe in global economy, I believe in global teams, and I believe in global markets. And if you want to be successful in global markets, you have to understand all the markets. You have to be on site in these markets. This is even true for development. It will be very difficult to develop for a Chinese market out of Munich and maybe for an American market completely out of China. So you have to build those global teams. You have to have access to global technologies. And you have to be present in global markets. So being a leader in technology development and being a leader in new products and new business models doesn't mean that you're completely focused to only one place.
But that state-backed industrial policy is antithesis to that view of globalization, isn't it?
I wouldn't say so, because all the time we had strong development of technology in Germany or in Silicon Valley, and now it will become more and more important and more obvious in China as well here. So I don't see an antithesis in this area.
So maybe don't fear it, but maybe see the opportunities around the plan.
That's the point. Yeah, you have to think an opportunity. What can you make out of it and still be a global player? This is the most important thing which Byton is heading for.